FOMC economist Vincent Reinhart of BNY Investments. Vincent, this morning in Scotland, President Trump was asked if he expects the Fed to cut interest rates. It kind of felt in his answer like he might be easing up on the Powell attacks. Let's listen, and then you can respond.
I think he has to. You had 11 cuts, you know. In Europe, they had 11 cuts. In other places, they had 10 or 11 cuts. And we had none, but I'm not going to say anything bad. You know, we're doing so well, even without the rate cut. With the rate cut, it would be better. It affects our housing a little bit. Look, we should be 3 points lower.
Vince, what do you think about that, where he said, I'm not going to say anything bad? I mean, if he's been pretty relentless in his attacks on Jay Powell because he feels rates should come down. Do you think he's coming around to the idea that the optics aren't great if you're cutting rates into a very strong economy?
The important thing about what the president said was his omission. He didn't say what time frame. Sure, rates are coming down because trend inflation is lower as the Fed got a handle on their previous mistake that let inflation go up. It's going down to the Fed's goal ultimately at 2%. The Fed will normalize the nominal Fed funds rate, the policy rate, accordingly. But that doesn't mean they'll do it this Wednesday or next month or necessarily the month after that. Markets participants should understand rates are going down, but they're going to go down on the Fed's schedule.
Your call is not for, obviously, this week, because there's pretty much no chance of a rate cut this week, nor for September, which has about a 63% odds. But your call is for which month that we will first see rate cuts?
December, last meeting of the year. The Fed has guided us to rate cuts in 2025, so they do want to deliver on that. And September is more of a jump ball. It really depends on the data. Monetary policy right now is data dependent. There are 200 letters about tariffs going out. I wasn't sure there were that many countries left in the world. We have to importantly hear from those earnings reports this week. How are CEOs going to talk about how they've seen tariffs, what they've passed through, what are market conditions? There are going to be some price reports, and they're going to care about economic activity, couple payroll prints. Depending on the data, the Fed could ease in September, but you're right, the economy's got a lot of momentum. Market economies are flexible. They move forward. Don't bet against them. And right now, it's not obvious we need a rate cut this week or next month. What we need is to understand that rates are ultimately going down because inflation's going down.
Okay, inflation is going down. However, one thing that isn't going down enough, perhaps, are mortgage rates. People are having trouble buying homes. We're still very close to 7% on rates when it comes to the 30-year fixed. We're looking at the 10-year yield and the 2-year yield right now moving actually higher. Maybe they're channeling your idea that rates are going to stay where they are for a bit longer than most people expect. I mean, the 10-year yield, okay, it's moving higher. The 2-year is at a 2-week high. How do we figure out a way to make sure that 30-year mortgages come down so people can afford a home, but that we don't ease too much so that inflation rears its head again?
I think you'll have to talk to Secretary Bessent. Part of the reason longer-term yields are high is because we've just issuing so much debt. We have big deficits. That's not his fault. It's the Congress's, importantly. And that's putting pressure on longer-term investors' willingness to buy that stuff. Part of it could be addressed by the maturity at which the Secretary sells debt. We'll look to that space in coming months. But part of it is just the reality that if the federal government is selling a lot of debt, that does crowd out other uses, including households wanting to get mortgages.
Vincent Reinhart, and it all comes as the stock market continues to hit record highs, certainly for the NASDAQ and the S&P, an intraday record just earlier today. So things look pretty good on many different levels. Good to see you. Thank you very much for joining us.
Thank you.